What are Lifecycle Funds? Let's cash in.
Finance for the everyday millennial. Hard-charging solutions. We provide an accelerant in the journey towards financial independence.
Welcome back to RINO Invest, the financial library for young professionals. Today we continue our military money series with a look at Lifecycle Funds within the Thrift Savings Plan, or TSP. The TSP is a retirement investment program available to members of the military. It is a defined contribution plan, which means it is a plan in which the employee and employer make contributions to the plan on a regular basis. The TSP closely resembles the 401k plans you'd often see at a private employer. To see how to maximize your TSP benefit, click the link you see on your screen now. The TSP includes Lifecycle Funds, referred to in the TSP as L funds. Lifecycle funds, which are sometimes also referred to as a target date fund, are mutual funds that are structured to grow your assets in a way that is optimized for the time frame that you choose. Lifecycle funds are long-term investments that are named by the year in which the investor plans to begin utilizing the assets. The portfolio of a lifecycle fund will become more conservative over time, which lets you minimize risk as the target date is approaching. Lifecycle funds help make investing for your retirement goals easier. Instead of having to choose several investments to create a portfolio that helps you reach your goals and regularly rebalancing, investors only need to choose a single target date that matches their time horizon. Lifecycle funds will periodically rebalance asset classes to optimize risk and returns for your time frame. A younger worker that hopes to retire in 2065 would simply choose a target date of 2065 for their lifecycle fund. An older worker that needs to retire in 2025 chooses a target date of 2025 for their fund. Higher risk portfolios would include more domestic and global equities, while lower risk portfolio investments will include more bonds and cash equivalents. With a lifecycle fund, investors are given the convenience of putting their retirement investing activities all in one place and on autopilot. Before we turn back to the TSP, if you want to get a handle on your personal finances, open an account with RINO Invest today. By opening a Club RINO Plus account, you will have access to a wealth of resources for financial success. From a net worth tracker to checklists, handouts, our reading list, courses, an educational portal, and a forum to speak with other RINOs. Go down to the description of this video and click on the Open an Account link. Also, please subscribe to the channel if you haven't done so already. It really helps us continue to deliver awesome content like this. All right, the TSP includes 10 L funds. Each is a diversified mix of the 5 individual TSP funds, G, F, C, S, and I. The L funds are designed to let you invest your entire portfolio in a single L fund to get the best expected return for the amount of expected risk you want to take on. As with other lifecycle funds, the year in the name of the L fund is the target date, and the mix of individual funds in each L fund is called the target allocation. The further away the target date, the more aggressive the target allocation. For example, L 2065 is designed for people who plan to retire or start withdrawing money within a few years of 2065. These are younger participants who can take on greater risk to seek a greater return. They will have time for their fund to recover from any market downturns before they'll need the money. The L 2065 target allocation includes more of the aggressive C, S, and I funds and a little of the conservative F and G funds. All right. Now let's take a look at what those individual funds are. The C, S, I, and F funds in the TSP are all index funds. The C, S, and I funds are high-risk stock index funds. The C fund is a common stock index investment fund. This is the most conservative of the 3 stock index funds in the TSP, and it invests in the 500 large and mid-cap companies that comprise the S&P 500 index. The S fund is a small capitalization stock index fund. The S fund invests in 4,500 companies outside the S&P 500 that make up the rest of the Wilshire 5000 index. These companies are smaller and less established than the S&P 500 companies, which increases the risk, but also the potential for growth. The I fund is an international stock index fund, which invests in established companies located in 22 developed countries around the world. The F and G funds are more conservative funds. The F fund is a fixed income investment index fund. This index fund invests in a wide range of debt instruments, including treasury and government agency securities, corporate and foreign bonds, and mortgage-backed securities. The most conservative fund is the G fund. This is the only fund that is not an index fund. The G fund is a government securities investment fund. The G fund invests in special, non-marketable treasury securities that is issued by the U.S. government specifically for the TSP. This is the only TSP fund that guarantees the return of the investor's principal. With low risk comes low return. The G fund has historically provided the lowest returns of any TSP fund. Once your L fund reaches its target date, all of the money in it becomes a part of the L income fund. At this point, you're likely to have reached retirement and you'll appreciate the more conservative L income fund, which relies most on the L fund and the G fund. Subscribe to this channel to see more of our content and click on the bell icon to receive a notification when a new video is published. Thank you for watching, and until next time, this is Cassian, reminding you to seek real education, invest in performing assets, get rid of bad debt, and engage in oversight of those assets.